well. Happy New Year. I know we've not been uploading for a long time, but it's going to get quite more regular as the year progresses. So we just wanted to run over what's happening with Matrix Trading, some of the updates on the team, and also provide you with the quick market breakdown on gold. As you guys know, as I posted, we have started the new Signal page. So already we've had quite a lot of success on the Signal page. You can see everything here is timestamped. So the first trades were sent in Asia, that TP'd at 65 pips. Second one, we TP'd at 58 pips. The third one you can see over here, that was another TP for 54 pips, so already 160, 170 pips or so. And then Signal 4 um was in profit, and then it went out in base entry. Signal 5, again, this one hit stop loss, AUD USD. We had a couple trades. This one, AUD USD, I think went up 40, 50 pips. And then today we had gold buys, which again TP'd over here at around 80 pips or so. So already we're around 250 pips or so. Then we sent a sell in just before London session, which broke even. And then we've just sent some trades now on gold over here, which are in profit. So already been a pretty good week on the market so far. I just wanted to recap gold, but the Signal page will be running in full swing. We will be sending trades at key times in London session and US session, and obviously we'll try to send a maximum take profit levels, which will most likely to be hit. But I just want to recap gold because we have just sent trade on gold right now, and it's running quite nicely in profit. So obviously, just to back up from the higher time frame perspective, um, gold did reach all-time highs last year, 30th of October, hit around 2788 levels. And obviously, since then, the Fed has changed its stance on the interest rates policy. They said in December that they will be continuing to keep interest rates much higher for much longer. Obviously, we have FOMC minutes later today as well, but from an overall structure standpoint, you can see over here, gold was trading from a daily external point over here. We got daily external higher high over here. We got daily external higher low, and then we pushed up over here. When gold broke down over here, we've got the daily structure breaking down. So the daily time frame is now bearish. It's created a new daily lower low, and therefore this is quite significant because this meant that the market now shifted from a bullish market dynamic into a bearish market dynamic, and this is the first time all of last year, which we had a clear break to the downside. So the market now was trading clearly in a as now creating bearish structure. So over here, as price progressed in November, price retraced up over here to create the daily lower high over here. If we go slightly lower time frame here, obviously we had printed the daily structural point over here, but in order to create the next daily landmark, the daily lower high, price is going to retrace an internal lower time frame structure. So we had over here, we had 2 hour structure pushing up over here. So we had a 2 hour higher high, higher low, and then we pushed up to another 2 hour higher high. Over here, we came across into the flip zone where selling pressure came in, and obviously over here we broke down structure. So this was the false change structure, which made people think that this POI over here was going to hold because in order to then become bearish again, the 2 hour structure here, which had been building bullish, had to now become bearish. But however, we then broke across over here and into the actual true supply zone for this entire move. And we have then subsequently then gone on to even break the 4 hour structure point sitting across here. So we can now safely say that our two time frames right now, the daily time frame is bearish because we broke across this point in time over here, which is bearish. And then we've got the 4 hour time frame over here, which is now broken across here, becoming bearish as well, right? And obviously there's liquidity sitting across here because if we fib from the push from the daily into where price reacted off at 27.24, you can see we are coming into inducement level. So the 61.70 ICT levels are all inducement levels here. So there is liquidity sitting here as people have bought here. So that's for future liquidity. So overall, we can see we're clearly in a bearish market environment right now. Towards December. So obviously, once we broke across this 4 hour structure over here, we need to now we've created a 4 hour. So let me just write this down for everyone's sake over here. So we are clear. So from a structure, I'll make this font a little bigger in a second. From a structure standpoint, daily time frame has become bearish, and your 4 hour time frame not bearish as well. But let me make this bigger, just so we are all clear. So we are clearly now in a bearish market environment, and obviously that's reinforced by the fundamentals that they were going to keep interest rates higher in December. The FOMC minutes came out. So once we've come back into um, over here towards the end of December, leading into New Year's, this area was tricky because again, you have to work out the points of interest where the 4 hour structure is going to be printed. Obviously, over here, you've got trend line liquidity over here. So none of these areas could have been the true supply where the selling is going to happen. You had another bit of trend line liquidity here, and the key here was you had relatively equal highs here. A lot of people were looking at this 2660 zone as a level where the sell-off was going to happen. You can see we broke across that 2660 level, just flicked through it into 2664, and we had a 4 hour, we had a nice 4 hour zone on these candles that are pressed against these big candles here. It's often an FU candle, and on a lower time frame, the significant supply or the significant in the case of demand is going to be there, and you can see the FU candle over here with the point of liquidity left. That is the supply over here that price was trying to reach for over here. So daily is bearish, 4 hours bearish. You can see the order block there, which price was trying to reach for. Obviously, 4 hour structure to build back is going to come build on its internal lower time frame. So over here we had, if we go slightly lower, we had 15 or 30 minute time frame, which was building the 4 hour lower high. So it had 15-minute lower high, higher high, higher low, 15-minute 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 higher high. And then once we came into towards the new year over here, price reached into that key supply area over here, and we broke down the 15-minute structure. So now daily's bearish, 4 hours bearish, and now 15-minute time frame has also become bearish. So let's write that down on our structure over here. So we got daily time frame, which is bearish, and then we got 4 hour time frame, which is bearish, and then we got 15-minute time frame, or you can say 30-minute, has now just become bearish. So all the time frames are starting to align in a bearish narrative over here. So now once price hits the supply zone over here, you've got price breaking down over here. And this is where you have to start understanding what happens around a point of interest once price hits a supply demand zone, because they're not going to simply break the structure over here, build a lower high on the flip zone, and give you the move for the expansion. Obviously, supply has to get converted into demand. So that's number one. And number two, you have to have interplay. So the market is going to entice buyers and sellers to interact with the market, i.e., put in orders so they can then induce liquidity and then set up the move for the real expansion. So the first thing that happens is when price breaks down structure over here, the first pullback is always going to go into a flip zone. And you can see the flip zone is an area of support and resistance. So you can obviously, we got a clear area of support and resistance on the market over here. So you can see over here, I've drawn this line. Let me make it some different color so we can see it much more clearly. It's currently yellow. Let me change that into red. So you can see this line is a clear area of support and resistance in the market. So when price broke down here, you clearly got this is the first return is always going to be on the flip zone. So this is going to be later liquidity. So you have the start of the initiation of phase two, which changes the character over here. You've got build up of internal liquidity. We broke down over here, and then we pulled back into the flip zone. So you're normally going to get a five drive pattern to the low. So you can see this is drive one over here. So we've got drive one over here. Drive two is this pullback, this entire section over here. So if I was to mark these five drives down into kind of like an Elliott wave pattern that you do get. So if we draw this, the five drives, you got drive. So this is the origin point. You got drive one, you got drive two. This entire section is drive three. And again, this is tricky because they build liquidity. They sweep it, drive four and drive five. Okay, so now first thing over here, um, they do this for several reasons actually. So over here, because price is now clearly broken structure here, they want people to sell at this 26.48 level, number one. So they're gonna induce people into this area to sell, and obviously those people got taken out. Number two, they're gonna induce people to sell over here because this was people see that as the point where after the structure broke initially on this 15-minute leg, you had this initial zone over here. However, we know that's inducement. So over here, the liquidation phase, which begins all the way here, is going to go and take out this entire bit of inducement over here and into that's what we did yesterday. Leading into US session, we had Asia. I sent the trade over here last night, and I'll show you that. If you, this was the trade that I sent yesterday over here, and I did say the take profit with 26.62. You can clearly see that here. However, I told everyone to close around 20 around this level over here because we did have a change of character on the 1 minute here, so I just told everyone to close around 80 pips or so. So still a very good trade from over here to here. And obviously you can see we took out the inducement. So as prices moved from 26.14, we've induced people here, as I said, because people are going to sell as they sell and they got induced and taken out. And then over here, price literally cut through that liquidity. And over here, now we're going to assess the lower time frames over here. So if we then look on the lower time frame here as prices hitting our supply zone here, so you can see there's a lot of intricate work that you have to remember. First, we're analyzing structure. Number two, we have to understand how price is going to move within the supply zone once it does reach there. So you can see over here, we got the yeah, we've got let me go on a slightly higher time frame, the 5 minute time frame over here. Yeah, we've got a nice I mean you could have taken the buy candle over here, or you got a nice supply zone over here. Obviously over here you've got relatively equal highs sitting across here, so that's liquidity. Let me mark those out quickly for us. As we want to be understanding the market completely. So you got relatively equal highs over here. Let's tag those over here. Boom. We got liquidity and we went through it over here. If we then look at the current price action, unless we want to enter on that zone itself over here, if you look at that price action as price is approaching here, you've got, and I'll label this in a sec over here, you've got the red line over here was the flip zone area, which got taken out. So you got, if I start marking the structures over here, you got 1 minute, to make this smaller in a second, 1 minute higher high over here. And I'll label this with a diagram as well in a second. So we've got 1 minute higher high over here. You got 1 minute. The minute. Excuse me, guys. Let me just try and fix this. Should be able to let me copy this. You got 1 minute over here. So copy and paste it. And there we go. 1 minute higher low. Higher low over here. And then you got 1 minute higher high over here. Obviously, lower time frame structure is difficult to read. That's why you have to be good at structure. First, you have to understand it from a higher time frame, because on the lower time frame, the structure can be difficult to read because the price action is very compressed. So So over here, we've got 1 minute higher high, higher low, our price pushed up, broke down here. This is the false break. So we always need to see a false break around our entry module or entry zones, because again, it's inducement liquidation play. Then we got 1 minute higher high over here. Let me copy the 1 minute higher low over here, show you. Got 1 minute higher low over here, and then you got 1 minute higher high over here. So then you broke down over here. So over here, price is currently in phase one. You want to convert the price from phase one back into phase four. So you got price breaking down over here. So phase two over here. And again, the same cycle that's on the higher time frame structural model here. After a break, you pull into the flip zone here. So this is your inducement. Over here, you're going to take this out. So this is liquidation. So over here, you again got 1 minute structure, 1 minute higher high, higher low, higher high. We break down. So this is the second break over here. Then you got the third break over here. And then obviously you have progressive order flow progressing to the downside over here, where the entry was sent over here for the team. So you can go on the other chart. Yeah, so you saw that price was breaking down, or you had the false change and the true change of character over here. Price then, when it was over here, broke down here, and you got in your progressive order flow here. On this leg over here, you can see again, price was then going up, higher highs, higher low, higher high. We break down here, false change of character, push up here. Then you got a minor structure over here, higher high, higher low, higher high. We then broke down, and then the entry comes back into this order block here. If I mark out this blue candle over here, we come into that zone and the entry's there, and you got a nice entry to the downside. And just to show you that again, I have just sent this trade timestamped and all 257. Obviously, it's 442 here, so you can see the trade's already in profit. I hope that was useful for you guys. From my perspective, gold is headed to the downside. It needs a significant correction to the downside from the higher time frames, and obviously, we've clearly established the daily time frames bearish. The 4 hour time frames bearish. The 15 minutes just turned bearish, and obviously 5 minutes not progressing, and lower time frames are all bearish. So I hope that was useful for you guys. The new signal page is up and running. We will be sending a lot of good trades there, and there's a lot of content to come this year. We are really locked in this year, and I will update you all very shortly about the team and what's been happening and what happened last year and all those things. But hopefully that breakdown was useful for you guys.